Hi everyone, this is Lindsay, and today we're going to talk about the Goldman Sachs Group Inc. So, as we all know, the Goldman Sachs Group Inc., founded by Marcus Goldman and Samuel Sachs in 1896, is a multinational investment banking firm providing financial services to governments and companies and rich individuals. So, today we're going to talk about the basic structures, management style, and the SWOT analysis of Goldman Sachs while we discuss what the Goldman Sachs Group had undergone during the 2007 subprime mortgage crisis. So first, let's talk about the services that Goldman Sachs offer. So Goldman Sachs, as I already mentioned, is a investment banking firm, which means that it offers financial services, including asset management, mergers and acquisition, and underwriting services. Due to the nature of the business, Goldman Sachs, although unfamiliar to the general public, plays an irreplaceable role in the global economy. Today, the Goldman Sachs headquarters is located in Manhattan, including 4 general business units as following: investment banking, investing and lending, institutional client services, and investment management. Currently, Goldman Sachs is led by a management committee consisting of chairman and CEO Lloyd Blankfein, and President and COO Gary Cohn, CFO Harvey Schwartz, Vice Chairman Michael Sherwood, Vice Chairman Mark Schwartz, and a series of other leaders including Alan Cohen, Gregory Palm, John Roger, and Eddie Cooper. So these are the people on the management committee of Goldman Sachs. And also, the board of directors of Goldman Sachs includes Lloyd Blankfein, Michelle Burns, Gary Cole, Mark Flaherty, William George, James Johnson, Lakshmi Mittal, Adebayo Ogunlesi, Peter Oppenheimer, Deborah Spar, Mark Tucker, David Vinier, and Mark Wickelman. Well, that's a lot. So Goldman Sachs follows the business principles that their clients' interests always come first, and the company believes that the asset of the company are the people, the capital, and the reputation. So now let's talk about the legal structure of Goldman Sachs. Initially, in the beginning, Goldman Sachs took form as a traditional partnership structure of unlimited liability, but as Goldman Sachs grows, the president, Henry Paulson, as well as John Corzine, the head of investment banking, replaced the Goldman Sachs traditional partnership structure with one that named the firm as general partner and named individual partners as equity holders and equity holders as limited partners. But while the company continues to grow, the board soon realized this problem, that whenever a board member retired, they are preoccupied with the capital problems of the company, and therefore they decided to go public. The Goldman Sachs Group made their initial public offering in 1999. As Paulson defined the IPO even more broadly, the public offering was one way of helping us manage that growth by giving us permanent capital and letting everyone be an owner of the firm. By helping us manage growth, the public offering also strengthened our culture, including mentoring or apprenticeship process for training leaders that we've had for years. This is just quoting the then president of Goldman Sachs. So today, the Goldman Sachs Group's Nasdaq real-time price is $160.05 per share, with a daily fluctuation of $1.20 per share. As we can see in the income statement provided in our final write-up, we can see that although the gross profit didn't change, it decreased a little bit, but it didn't change as much from 2014 to 2015. We can see that the net income applicable to common shares has decreased dramatically. Now we're going to continue to a SWOT analysis of the Goldman Sachs Group, and we will hopefully learn more about Goldman Sachs during this SWOT analysis. So, as we know, SWOT analysis S stands for strength. The strength of Goldman Sachs comes from multiple areas. First is the high profitability margins of an investment banking firm. Second, as most people in the financial world already understand what the name Goldman Sachs mean, one of its strengths came with the brand name and their reputation. And also one strength is that Goldman Sachs, although headquartered in New York, has global office all over the world and globally at around 3,000 global employees. Therefore, this international engagement offered Goldman Sachs an edge in the global competition today. However, the weakness of Goldman Sachs include first, because of it has become such a large financial service company, there is a negative cash flow from operations, and also the interest of their income is unstable, usually fluctuates with the business cycle and the entire economy. Also, several legal cases caused Goldman Sachs lose its reputation. The legal issues caused a lot of public attention and problems. However, the current economy has presented Goldman Sachs with unique opportunities, including the emerging regional markets around the world, especially in Asia, Pacific, and Southeast Asia, like in countries like Japan, China, Korea. These countries, there are emerging needs for investment banking and other financial services, and therefore offers Goldman Sachs, a company with rich history, a great opportunity. And also, next, we are gonna see that threats still exist for Goldman Sachs. First, it has competition coming from two major financial services company. One, although have been bought by the Bank of America, we're talking about Merrill Lynch. I think that's the right pronunciation, but I'm not sure. This company is bought by the Bank of America during the economic crisis of 2008, but it was a financial service company, and it is its competitor. The main competitor to this day to Goldman Sachs must be Morgan Stanley, a similar financial service firm. As we already see that Goldman Sachs operates in a oligopoly market in which there aren't a lot of similar firms offering this business, and there are barriers to entry. And also, the conflict of interest of the public and the firm also pose as a threat, as well as the financial instability. Now that we have completed the SWOT analysis, we can more clearly see the situation that Goldman Sachs is in. The target market of Goldman Sachs, as we mentioned in the beginning, are mainly companies, large corporations, and then countries, as well as wealthy individuals. So this is different from traditional banks, as we can see. and this market condition led to unique events happened during the 2007 subprime mortgage crisis, and we're going to take a closer look at the 2007 subprime mortgage crisis. So as we might have heard a little bit from the newspaper or the general media, we know that the 2007 subprime mortgage crisis started with a housing bubble, which means that the housing price started to increase dramatically from 2004 to early 2006, and then all of a sudden the housing prices decreased from 2006 to 2007, with the housing price with the prices of the housing decreasing so much. It caused a lot of people to lose the ability to pay the mortgage, and to in even more dramatic situations, sometimes for the mortgage that a person bear is even more expensive than the house itself, causing a lot of people in awkward situations which they do not have the ability to pay the mortgage back. However, during that period of time before the housing bubble collapse, investment banking firms such as Goldman Sachs and Morgan Stanley, they did largely on mortgage-backed securities and other financial assets. When the mortgage crisis came, the mortgage-backed securities lose their value, and causing several investment banking companies to almost go bankrupt. So this is what happened during the 2007 subprime mortgage crisis. Banks, because they invested so much on mortgage-backed securities, investment banking firms. They invested so much, and when it loses value, it severely damages the company's financial situation. And many companies either were bought by big banks, or they went bankrupt. Two companies, Morgan Stanley and Goldman Sachs, chose to cope with this situation by turning themselves into a commercial bank. By turning themselves into a commercial bank, they submit themselves to more regulations. They ended an era and opened a new era in which they became commercial banks, and there is literally no investment banking firms, only offering a firm that only offers that services. So this is quite the milestone in the financial world. Now let's talk about the bailout. We've heard a lot about the bailout. What it is called the. Excuse me, 1 second. So the bailout is called the Emergency Economic Stabilization Act of 2008. This is commonly referred as the bailout because this is when the government, well, here it means Congress, approved for the United States Secretary of Treasury to spend up to $700 billion to purchase distressed assets, especially mortgage-backed securities, and supply cash directly to the banks to rescue investment banking firms who were injured so much in this crisis. Even though the government offered so much money to companies like Goldman Sachs and Morgan Stanley, they still chose to turn into commercial banks because that is barely enough to cover their losses. And with the money that taxpayer paid, the bailout, the companies get to live. And now, although it transformed into different forms of banks, we can still see Goldman Sachs and Morgan Stanley working on Wall Street. So why are a lot of people So we know that not all of us know, but like some of us might know that the reputation of Goldman Sachs is damaged during the subprime mortgage crisis. That is because there are several controversies over whether these investment banking firms opt to invest in mortgage-backed securities. Many believe that they betted on the housing bubble. Let me read one quote that is quite interesting. Okay, so I don't think I'll find it, but what it says is that these companies they chose to buy a lot of, although they've foreseen the situation in the future, but they still betted on the housing bubble and deliberately caused this to happen. Now that we have learned the management side, the financial situation, the services that Goldman Sachs offered, as well as the SWOT analysis and what Goldman Sachs had undergone during the 2007 subprime mortgage crisis, we're clear on this issue and we learned more about financial service firms. And I hope this video is helpful to you to learn more about the Goldman Sachs Group, Inc. Thank you.